Many international companies have listed themselves on Nasdaq First North in Stockholm lately, and the most recent one is the American power grid enhancement company SmartWires. Today we're speaking with their CEO Peter Wells about their road ahead. Welcome, Peter.
Hello, Johan. Thanks for having me.
What does SmartWires provide?
We provide digital power flow control devices for the grid called SmartValve. They're small modular devices that are quick to deploy and they're scalable, and they give the transmission system operator the ability to push and pull power flow across the grid.
And why are such solutions needed?
Well, in simple terms, we've seen, of course, a lot of innovation and change in the energy, the way energy is generated and the way it's used, and the grid. As part of this big energy transition, the grid must change as well and must modernize, and this is part of that story.
So how does the move to more renewable electricity in the grid affect the demand for your offering?
It really increases the demand. Obviously, what's happening now is that generation is moving away from large, let's say, centralized fossil and nuclear generation to more dispersed renewable options. And the way I think about it is a little bit like somebody's taken the heart from your chest and put it in your left foot, and your arteries and veins and capillaries now must rewire and really adapt to this new paradigm. And that's exactly the same on the grid. And as this high penetration of renewable comes onto the grid must modernize and find ways to evolve and adapt and be able to manage that power flow from this new generation source to the consumer.
Energy markets are often monopolistic, highly regulated, etc. How do you overcome those challenges as a new entrant?
Well, we work across all markets in the world, so the market for us is global. I would say even in monopolistic situations, we can work and partner. There's ways for us to provide services. All grid operators, regardless really of their market, are facing issues with capacity, issues with congestion. And so even though regulations vary globally, some incentivize modernization of the grid, some perhaps don't, we find there's always ways to work and partner with utilities because the fundamental needs are the same, and those needs are building. And the need to move faster, add capacity, provide grid stability, flexibility for future change is really the same across the world. So almost for us, I think, regardless of the market condition and the way the market operates, we find there's a great solution with our product.
So which geographical markets do you focus on, and what are your geographic plans for the future?
Yeah, so as I said, all the markets are relevant. Probably the ones that are the most relevant for us are markets that are adopting renewable energy at a faster pace. Perhaps those that have the more developed grids, older grids. And so we'll focus there first because the need is perhaps clearer. Big focus for us right now, Europe, North America, some countries in South America, and also Australia.
Okay. Countries can have different electricity standards and so on. How do you achieve synergies when there are differences between your different markets?
Yeah, it's a good question. So relatively straightforward for us, actually. So whether a grid is 50 hertz or 60 hertz, regardless really of the grid standards that are being applied, the fundamental product for us, the hardware, is the same. What can change for us more so is the software and the firmware that we're using. And so we'll take really the same product, different variants for different ratings in different markets, and then adapt the software for the situation.
How do you handle the competition from big electrical companies like ABB, Siemens, General Electric, etc.?
Well, we don't mind competition. In our view, we have a really strong and well-differentiated product. It really outperforms the legacy solutions that are on the market today. By a lot of the models that we do, the cost to benefit ratio is about 4 to 1 times in favor of the SmartWires product. We've done something unique. We've integrated hardware, power electronics hardware and software in a market that struggled to do that. It's a really, I would say, highly patented solution. And it offers flexibility and speed of deployment and other elements that legacy solutions don't offer. So we find that our technology and the IP we have is really a strong differentiator.
Sweden, if we look at us, we have problems with transmission capacity from north to south in particular, and we are investing in our grid. Do you think that your products could work out here?
I do. I do. Look, Sweden's got the same challenge that we see in many countries across Europe. You've got a really great renewable energy resource in the north. You've got demand in the south, and so there's challenges sometimes with getting that generation to the demand source through congestion. And we typically will follow a good sequence, I would say, of analyzing data, doing some modeling, looking at use cases, and then from there moving on to pilots and building out. And we've done the same thing in many countries. We've had some initial discussions in Sweden. We think there's an exciting opportunity in Sweden, really. You've got such great resource. If we can unlock those power flows, not only can you drive your electrification, but I think you've got great opportunities to export to neighboring markets as well. And there, I think maybe we can also help, because if we fix the challenges that we see in those markets too, then the power flow, obviously, the export opportunity increases.
Before your IPO, you sold new shares to investors for about $150 million at a pre-money valuation of well over $300 million. And then on the first day of trading, the stock dropped about 25%. That was a pretty big deviance compared with the fact that you had a lot of investors that had signed on early on for a higher valuation. Were you surprised by the reaction?
Yeah, I was a little bit, to be honest. It was a little disappointing, but look, it's one day of trade and it was very low volume. And so the market, I think, will get to understand the business, get to understand where we are today. It's not really an aspirational business, it's a real business. And so we're delivering product now and the growth trajectory is pretty clear. And so our focus is really all about continuing to build a great business. And I think the value will be recognized and understood, and the stock price over time will reflect that.
Okay. You target revenues of $700 million in the midterm. That would be a substantial increase from last year's $15 million. What do you see as the main hurdles on this road ahead?
Yeah, it's ambitious. I would say what we're looking to do, but we have a clear path already this year to 50 million, which is from backlog. And so we've done a lot of detailed modeling. And so the projections we feel are very realistic, and they're there for us to pursue, I think, and to make a reality. Challenges for us, probably two things. One would be technology adoption, and the second thing would be scaling. On technology adoption, we're late stage, really in development. We've been investing in developing the technology and the product for 10 years, and we have thousands of proven device years of operation in the field. And so I think the technology adoption inflection point is really now. The scaling, we invested last year and this year into a footprint that would allow us to drive the growth through 2023. And so we obviously have a clear path near term. And then midterm, we understand how to continue to invest to build up the capacity globally and to make sure that we can drive that growth.
All right. Thank you then, Peter, for being with us, and good luck.
Thanks, Johan. It's a pleasure.